Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden language of corporations, and today we've got a special treat. Spectral AI is looking to raise some serious cash, but are they just selling paper or is there real value here? Let's dive into this filing to see what is really going on. This is a report from Spectral AI Incorporated covering October 2025. It is basically a public announcement detailing some important agreements and events that have happened with the company. Spectral AI is dealing with their common stock, which is the most basic type of ownership in a company. It has a very small stated value of just a tiny fraction of a cent per share. They also have these things called redeemable warrants. Think of these as coupons that give people the right to buy shares of their common stock at a set price. In this case, $2.75 per share. These are important because they can be a way for the company to raise even more money in the future. Now, Spectral AI is calling itself an emerging growth company. This means they are a relatively new company and are allowed to follow some slightly different and often less strict rules when it comes to financial reporting compared to older, more established companies. The big news here is that on the 22nd of October 2025, Spectral AI entered into what they call a securities purchase agreement. In simpler terms, they made a deal to sell a bunch of their stock. So, they are selling over 3 million shares of their common stock. Each share is being sold for $1.9. This is a pretty significant amount of stock being offered. It is important to note the par value of the stock is almost zero, meaning almost all of that $1.9 per share is going directly to the company as capital. This sale is happening under a plan they already filed with the US Securities and Exchange Commission called an S-3 registration statement, which was approved earlier. This means they have a legal framework in place to sell these new shares. But that is not all. On top of selling shares, they are also selling warrants. These are like options that give the buyer the right to purchase more shares later. They are selling regular warrants for up to 4 million shares and these special pre-funded warrants for another 935,000 shares. These regular warrants have an exercise price of $2.51 per share. This means that if the stock price goes above $2.51, the warrant holders can buy shares at that lower price, making a profit. A key point is that these warrants can only be exercised after the company gets approval from its shareholders, or after 6 months, whichever comes first. They're also good for 5 years. The pre-funded warrants are a bit different. They were sold for almost $1.9, but their exercise price is a ridiculously low $0.0001 per share, effectively almost free to exercise. This is often a way to structure a deal where the buyer is essentially getting the shares now, but with a slightly different accounting treatment. They can be exercised right away. These warrants and the shares that will be issued from them are being sold under a specific exemption. This usually means they are not being offered to the general public in a way that requires extensive registration, but rather to a select group of investors, often sophisticated ones. The agreement itself has standard legal clauses, outlining what the company promises and what the investor needs to do, and conditions that must be met for the deal to be finalized. Let's talk more about these pre-funded warrants. They have an exercise price of just $0.0001, essentially pennies. They can be exercised right away and expire when fully used. Holders can choose a cashless exercise. This means they don't need to pay money to get the shares. Instead, they'll receive a certain number of shares based on a formula in the warrant agreement, after subtracting the exercise cost. It's a neat trick to get shares without upfront cash. There is a limit though. A single investor, including their related parties, cannot own more than 9.99% of the company's outstanding stock after exercising these warrants. This is to prevent any one entity from gaining too much control through these warrants. If something major happens to the company, like a merger or acquisition called a fundamental transaction, the new company that takes over will have to honor these warrants. Now for the regular warrants, these have an exercise price of $2.51. They can be exercised starting on what they call the initial exercise date, and they expire 5 years after they were issued. Crucially, the company's board is recommending that shareholders approve the issuance of shares that will be used to cover these warrants. If they don't get this approval by the 1st of June 2026, they'll keep asking shareholders at regular intervals until they do. This signals that issuing the shares for these warrants might require more stock than they are currently authorized to issue. If the company's registration for selling these shares isn't active after shareholder approval, warrant holders can also do a cashless exercise to get their shares. Similar to the pre-funded warrants, these also have a control limit, An investor can't own more than 4.99% of the company's stock after exercising these warrants. This is a tighter limit than the pre-funded ones. Again, if there is a fundamental transaction like a merger, the new company takes over the obligations related to these warrants. This is a pretty interesting clause. If a merger happens, the warrant holders can force the company or the new entity to buy back their warrants for cash based on their calculated value. This is like an early exit option for them if the deal involves a change of control. Spectral AI also brought in Northland Securities Incorporated to help them sell these securities. Northland is acting as a placement agent, which means they are essentially a broker finding buyers. The total money raised before paying fees and expenses was about $7.6 million. They sold shares and warrants to get this cash. The deals were officially finalized on the 24th of October, 2025. The company plans to use this money for general operations. Think of it as keeping the lights on, paying salaries, and funding day-to-day business activities. They are paying Northland a 6% commission on the money raised from selling the shares described here. That means a significant chunk, almost $450,000 of that $7.6 million, goes to the placement agent. They also signed a registration rights agreement. This is basically a promise to the investor that the company will make it easier for them to sell their shares in the future by filing the necessary paperwork with the CC. The company has also included a legal opinion from their lawyers, Reed Smith LLP, confirming that everything they are doing with these shares is legal. This section basically confirms that the warrants and pre-funded warrants are being sold in a way that doesn't require a full public registration, again relying on exemptions for certain types of investors. This means the investor who bought these warrants can't just turn around and sell them to anyone in the open market without meeting certain legal requirements, like having a proper registration in place or qualifying for other exemptions. On the 23rd of October 2025, the company put out a press release about the details of this offering. They also included a standard disclaimer about forward-looking statements. This is a legal requirement, essentially saying that their future plans and expectations might not actually happen and could be affected by various risks. This is where they basically say that a lot of things can go wrong that they can't predict, and they are not obligated to update these statements if things change. It is a way to protect themselves from lawsuits if their optimistic projections don't pan out. And finally, this section lists all the documents that are being filed along with this report. These are the actual contracts and legal documents that support everything we just discussed. Now, let's put on our investor hats and think about what this all means for Spectral AI. They've just raised approximately $7.6 million. That is a decent chunk of change, especially for an emerging growth company. They plan to use it for working capital and general corporate purposes, which is pretty standard. However, they are also issuing a lot of potential shares through warrants. The exercise price for the regular warrants is $2.51, and they've sold shares at $1.9. This means if the stock price stays below $2.51, those warrants likely won't be exercised, and thus the company won't get any additional cash from them. The fact that they need shareholder approval to issue more shares for the regular warrants tells us they might be close to their authorized share limit. This could be a bottleneck for future fundraising or stock-based compensation. The pre-funded warrants, with their almost zero exercise price and immediate exercisability, are essentially like selling shares directly. But structured differently, it's a way to get capital now while potentially deferring some of the immediate share count dilution impact on paper. A key risk here is that these deals are often structured to benefit the investors more than the company in the long run. If the stock price doesn't significantly increase, the warrants become worthless. But if it soars, the investors can exercise them at a discount and realize substantial profits, while the company might have diluted its ownership significantly. The company's reliance on these types of financing with warrants and private placements suggests they might be finding it difficult to raise capital through traditional means like profitable operations or larger equity offerings. Overall, Spectral AI is in a growth phase, raising funds to operate and potentially grow. However, the structure of this deal, with a large number of warrants, raises questions about future dilution and the long-term value for existing shareholders. It is a classic move for companies needing capital, but investors should be aware of the potential downsides of that capital coming with a string of future share issuances. Alright, that is our breakdown of Spectral AI's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.